Good morning and welcome back to the Opportunistic Trader for September 18th, a Tuesday. An exciting overnight last night. Market sold off late yesterday because Trump was going to impose the tariffs. He did that. He did a 10% tariff to the end of the year on 200 billion, and he takes it up to 25% after or at year end. We don't feel that that is going to be imposed. It was sort of the takeaway was he had to do something, so he imposed it. Markets traded weak off of that. S&P gapped down about 6, which is really not too much, and then went down about 11, 12. NASDAQ was down 30, 40. Asian markets opened flat and then exploded up. The Nikkei was up a couple of percent, about 1.5%, and the Shanghai was up almost 2%, as well as Hong Kong. I guess, Vince, the tariffs are good, or maybe it's the news is out and it doesn't
Larry,
doesn't
don't
mean
you know
anything.
that 10%? I'm sorry, excuse me, sir. 10% tariffs are good. 25 would have been better. That's clearly how it works.
I guess.
Well,
So
kidding aside, though, your comment about we were talking off the air. Your comment about the market might have been pricing in worse. The fact that he's only turning over one card of his hand instead of going with the full 15 or 25% he can go with is a sign that that's an olive branch coming from him. So the markets are perceiving this possibly as the beginning of the end.
that could be possible. I just think it's the same mantra as going back 7 years ago or 6 years ago to Greece, and to about 9 other things that have happened, or maybe more since then, and it's always a big non-event. Um, and again, I guess it's a non-event. It's, the market. It's funny though, because everybody was speaking and saying if he does the tariffs, it's really negative. It's negative long term, and I guess it's just about today's action and today's trade. The
Right.
markets are trading firmer.
Right. And it may very well be negative long term if they were to stay in place long term. But we're active traders and we're looking at how the market is reacting to tape news now. And it's reacting in a way that we are not surprised of anymore.
No, I mean it goes the opposite of what makes the most sense. It's been doing that for years. It's a triple expiration. I discussed it yesterday. Generally, that is an up week or up from where it is at some point. So, maybe today we'll have some two-way action. I'm not bullish. I've stated that yesterday. We were able to capitalize on a short S&P position against puts. We were called out. We had a really nice winner on that trade. Today we came in flat, opportunistic, to be able to capitalize on any movements. The S&P is up about 4.5, which is up, but it's really not that strong. But $15 off yesterday's low. NASDAQ is actually underperforming slightly the S&P, or basically in line with the S&P. That underperformed significantly yesterday. That's been something that we've seen over the last couple of weeks, is the underperformance of NASDAQ versus S&P. I guess that spread
For
widened.
different reasons too, right? I mean, first it was not trade, but uh, violations by the internet stocks, and everyone rotated into Apple, and then the Apple potential bad news came out about their demand for iPhones, and that stock was down. So there's like a negative rotation going on right now within FANGs. It seems like.
Well, it's interesting that you talk about it, and I know usually we get into this a little bit later in the morning, but I'm looking at my board, and all stocks are green except Facebook. I don't know why Facebook's down 1%, but they've been hammering those stocks. Facebook is probably about $1 off yesterday's, or half $1 off of yesterday's low. That market continues to look weak. I think that the social stocks are really not looking pretty. Twitter is down in the 28 half range. So these stocks have come in significantly. Expect them to go, lower from here as well. Scouring the board, the dollar is, I guess, sort of mixed here. The euro's up slightly. British is down slightly. Canadian's back to $1.30. We haven't talked NAFTA in about a week. So we haven't talked Turkey in 3 weeks, but we haven't talked NAFTA in a week. So I'm sure that's going to come on the table before the end of the week, and somehow Trump's going to do the best deal there. So we'll keep our eye on that. And 10-year note hovers at 3%, non-impactful to the market, which is surprising to us.
Well, it had a moment yesterday where it was impactful, but that was quickly removed.
Yeah. So nobody cares about
exactly
whether rates are going higher or lower in the market. And it's interesting. I did a segment yesterday for radio, and I was saying, they asked me a question, how it's different than 15 years ago, and the real difference that I see is that the markets 15 years ago were pure. You didn't need a reason, it didn't matter. Now everything is a reason. Why did it happen? Who's doing it? What happened?
Right.
And the explanation is off the causation, but it's after the fact. So you could read a headline that says market's up because of good trade talks, and then you'll see the market down, and they'll just either flip the headline to trade talks aren't good, or they'll even use the talks are going well.
Right. The key linking phrases between what they perceive as correlation and causation are either because, as in markets are up because of the North Carolina flood, as, where they can't really prove it, markets are up as North Carolina floods, or when they're wrong and they have to invert it, markets are up in spite of the North Carolina floods. So, it's all search engine optimization stuff. They need to have answers even when they don't have them.
But we never really had that.
No,
we
didn't.
When we looked at markets.
We didn't. We would have headlines, the stock market was up today. And then you'd watch the show and you'd listen, and the guy would give an opinion. The opinion wasn't the title, and everybody's scrolling headlines now. So.
Oh, I wanted to also point out, I'm looking at oil, looking to short oil in here against $70. Haven't put the position on, but we are looking to put a short on there. If it doesn't happen in the next probably 15 to 20 minutes, we'll probably just put a generic short on in this level. Oil was down about 60 cents last night. I guess in reaction to the tariffs, and turned and ran about $1.40. But crude's been the best trading market by far over the last couple of years. I mean, it's awesome. And
it continues to be that way. If I could add to for your own calculus, OPEC had a quick little meeting this morning, and Saudi Arabia said they're comfortable with Brent being above $80, and that's a comment on them being asked about their concerns of Iranian oil not coming to market or what have you, with the sanction situation. So when you look at WTI and Brent hovering between $9 and $10 spread, whatever trade, I know that you don't trade based on headlines, but that's the other news that's out there. So Saudi Arabia is not bitching about oil, at least Brent being above $80. So whether that is a news item to sell the rally or buy the rally, it definitely depends on your tactics and your observations. So I just wanted to throw that in there. That was this morning.
I don't know if that's market meaningful, but we'll keep it in the back of our head. We'll look at the action, to make decisions. I think everything is, as Mike always says, risk on, risk off. It's either they're buying everything or they're selling everything.
Right.
Yesterday's close was interesting to me in the S&P, just because it was really for sale into the close, and the market sold off and finished on the cash basis near the low of the day. But what was interesting to really look at was right after the bell rang at 4 o'clock, they had futures buyers, and they bought the futures up to like 93 and change. And then, obviously the sanctions came, and the tariffs, I mean, and the markets traded down. But I thought it was in the market,
Right.
at about
They
at a
traded down from a higher level. I totally see what you're talking about. It's. Go ahead. I'm sorry. I'm interrupting.
no, it's fine. Yeah, so they put it at a little bit higher level so that when they do take it down, it doesn't crater. But what was interesting to me, and just thinking about it rationally, which is always hard to do, that everyone knew that they were going to impose the sanctions or the tariffs on these guys. Greg was hitting me in the chat, and also on my phone, that this was coming after the close. So I was shocked that they ran the market up. But again, it might be one of those things, like I said to you before, it's about the level. If they make the level a little bit higher, it makes it easier, to handle the down move. But
Right.
they did trade down. They traded down for actually a couple of hours last night, right into the Asian opening, and made lows near the Asian opening on US equity indices, on the futures. And then as those markets firmed, the market firmed. But it was interesting was the the Nikkei futures trade basically throughout, even before the cash opens, and they were pricing in actually an up opening, which was surprising. And I was sitting around saying to myself, this something doesn't look right, because they're pricing in an up opening. So it worked out for them. And today I think will be I'm hoping, and I'm thinking today will be a really good trading day. Both sides of unchanged, some good headline news. But I'm shocked that the market has this muted reaction, that they don't care, because everyone was freaking out that if he did the 200, that the market would, pretty much come apart, and it's certainly not done that.
Speaking for myself, I mean, yeah, I feel the same way. And the only conclusion, I mean, there's one of two conclusions for me, as a person who's trying to figure out where my own calculus, missed the move, is either I did not put enough emphasis on the old buy the rumor, sell the news concept, or I think, and this is more likely, that I didn't focus enough on the percentage of the tariff. So he's not starting with 25% or whatever he says. He's starting with 10%, which is, I think, kind of maybe part of the Trump blinking sort of thing. He's still blinking. He's just saying, okay, we're going to put a 10% tariff on it, and it'll go up to 25% a year and a half from now, or 6 months from now, if we don't get something done. So maybe the market's saying that he's coming to his senses, and perhaps China will as well. I don't know, but for me, the jury's still out, and I'm just going to trade it intraday, and try not to put too much weight on my own subjective analysis, I guess.
Yeah, I agree with that. The only thing that's interesting is when that headline came out, the initial was that it was tougher than they expected. I guess him throwing in the 25% at the year end was a little bit different. He's never doing that. I don't even know what he's doing, and he's probably not even going to put. Who knows what they're going to tariff? I know they're not doing anything on any real goods that are coming in here. I don't know. They're hitting some industries that probably, don't deserve to be hit. And they're leaving Apple alone, and everyone, all those
Right,
guys
Apple
alone.
and car seats and baby stuff. But I would think if we're looking, if you and I are on the same desk as we are, virtually, looking to make sense of this, and there's no one else around us, my conversation with you would be, maybe we're not wrong. Let's see what China says and trade and trade before that lightly and trade after that if it starts to make sense to us. Because China's got something to say. I mean, that's what I would be saying right now. Let's trade it.
You think they have something to say?
Well, I mean, they're going to come back with their own, probably more well thought out comment. Because I mean, what you're looking at is let's say you're China and you're looking at your counterparty across the table saying, I'm sending out Mnuchin to talk to you for back channel conversations. Oh, and by the way, he doesn't need to make a deal. F you. Oh, and China says, well, you know what? We're not really going to have a conversation with you then. Well, then I'm going to levy those tariffs. Here they come. And China's like, bring it. And then he does it. And at the same time, it's kind of like he's trying to be good cop and bad cop at the same time. And I'd be interested in China's reaction. And maybe the stock market in China is discounting some reaction from the Chinese government. I don't know. I'm just trying to handicap some explanation, as far-fetched as it may be, for markets to be doing what they're doing. Because you and I both know, long-term, this isn't good for any market. Short-term, however, shit, let's buy it.
Well, I think a lot of this also has to do with expiration week and the SPY dividend and all of the stuff and the rig that's around that whole transaction, which we've discussed.
Well, then that's even cooler, right? So we're on the desk alone talking again, and I'm saying to you, and you're saying to me, this should be bearish. But the mechanics of a triple witching hour, or whatever they're calling it now, a quad witching hour, or option expiration, maybe those mechanics are propping the market up a little bit artificially.
Maybe. I mean,
Maybe.
I mean, listen, we're early in the week. It's only Tuesday, so there's a lot of trading to be done here. But we're keeping our eye on that. The trade that the oil trade, oil's stronger than anything on the board. I guess it must be those OPEC comments or whatever. It's trading higher.
They really, I mean, that's the point I was trying to make to you. Like as a student of OPEC comments, it always moves. Always is a strong word to use, but it almost always moves the market in a direction they want to, and then they hit a button and they print more oil, so to speak. So if oil falls, it'll fall from a higher height, and you might get the move you want. That's all I'm saying.
Yeah, it could be possible. Looking at the stocks, Apple is up slightly. It traded actually about 2 lower after the close last night from the settlement, so it's rallied a couple of bucks off the low. The one outlier that I'm looking at, and either there's some news or it's just trading very heavy and it's trading through or on the lows around here, is Facebook, which is trading at 158.80, down about percent and 10. 1.1%. That looks interesting. The other FANG stocks are up. Amazon's up 1%. Actually, it's up 0.5%, and the other ones are up under 1%. So don't see a lot of strength there. Tech probably stays heavy until it becomes not heavy anymore. The trade probably is to be long S&P and short NASDAQ. That trade's worked well for the last month. Probably continues here. Tech in general looks heavy. Looking at the FXI, our favorite China indicator, it's up about 1.1%. Not very much. It's only 50 cents on the stock. But it's still up, and the vol is, basically flat, although at elevated levels relative. Yesterday on a down 20-day, volatility goes up like 10%. So it's the same mantras intact. Don't see anything. Again, we don't have a position right now. We were short S&Ps. We got taken out by a put option, which worked really well. It got us out of the market at 93 on the SEP future. And overall, between all the spook trading over the last couple of days, it was small profitable, which was good for us. And now we're
Oh,
able to look at the markets.
a word about Facebook. It is one of the, a lot of people are trading these, and we do as well. Facebook is one of the few fangs that actually is moving, I think, in line with news. There's a continual bad vibe coming out of there, whether it be congressional hearings or, I think, more relevant to the fundamentals. They're hemorrhaging users, and I think that is actually, material to their business, and the stock market is actually reflecting bad news in a negative way. So um, they're losing millennials left and right. It's almost like remember MySpace? Uh,
A little
you
bit.
know, eh,
I'm
it's like,
not. I'm not a social media
well,
guru,
let's put it
such
this way.
such
Let's
as
put it in terms
yourself,
that we can
Vince.
understand. Facebook is the carousel of home movies that you used to have to sit through with your grandparents. Uh, uh, I think in the view of, our kids and our kids' kids, it's old, so they're not getting fresh users.
Yeah, I don't really know. I just know that the algorithms have changed. We actually were involved in a business that did a lot of social media marketing, and I guess over the last couple of months or whatever, it seems like things have changed a little bit, but it's yet to be seen. I still think somehow they're listening on my phone. I don't know why or who it is, but I somehow talk about something, something, and then 10 minutes later I get an ad about it. So I don't know if it's
Yeah,
just coincidence or or whatever, but you
no
know,
coincidence. That's no
you know,
coincidence. We'll
I,
find out later on, 10 years from now, when they open the documents up.
I mean, listen, Zuck is so wealthy, and he doesn't care anymore the way they did, and they know how bad they cheated by getting all
Right.
this information, and he knows he has to get off that. So I don't think that the company on a profit basis is going to be anything of what it was. So it could be one of these that it stays down for years, but somehow the public loves these stocks. They need stocks that are, $200, $300, $2,000 to trade. Otherwise, they can't make money. So these are
Yeah.
the rah-rah stocks. Again, I'm hoping that we have a decent trading day. Volatility is down about 5% in the front month. Yesterday was up about 10%. So it's retraced half the move on a S&P up three-handle day. So again, they love to sell that vol, and it
Right.
you know
If 5 guys are buying puts before Trump speaks, 10 guys are selling puts the moment after he speaks. That's what it feels like.
I don't know. I just don't. I'm just shocked that we waited for this, and the market like was hostage to this, and then it comes and nothing happens. I mean, literally, this is the ultimate non-event.
Right. Not even a good trade. You know what I mean? Like, not even a really good trade out of it
No,
to
this.
fade or to run with. Either way, it's kind of frustrating.
Yeah, no, it really is. Went to sleep last night after the football game, and markets were not doing much. The Nasdaq was down about 15, and the S&P was down about 2. And then I woke up, and S&Ps did trade a bit higher than they are now, about $4 higher. So they were up about 7.25. But overall, these are not big moves, and this, I guess, was considered big news. So to have no move off of big news is not boding well. But maybe this is one of these delayed reactions. Maybe it comes in a day or two. Maybe it comes off of what China says back to us or does back to us. Listen, the truth is, again, and you probably know a lot more fundamentally about this, but I don't think they have anything to do. I don't think they have a leg to stand on. I don't think
No, what are they
they.
going to do? Tax the three things that we sell to them? I mean, uh, they're probably going to do more capital controls, perhaps, and I think that's why the yuan is stable. But
But if
uh,
but if you really think about it, Trump is in a way hurting. our businesses because he's
Yes.
tariffing things coming from China, okay, to us. But the funny thing is, it's people like myself that produce a product in China that comes here that's going to be paying the taxes or the
Right.
tariffs.
No,
So
you're. Look,
it just
I
doesn't
concur.
even make any sense because you're hurting your own businesses.
He's not
We're
making
buying our
American
own
good. He's
product.
making.
It's just, listen, if you have a widget or whatever, and unfortunately it doesn't pay to make it here, why would you have to make it here? Because he thinks you should when it costs you 3 times the amount of money to make it here.
Right. No, exactly. Well, in the end, every I don't want this to turn into an editorial where I start ranting, but in the end, every country or nation state uses their tax base and their captive customers, meaning their citizens, as the support group for what they're doing. And so in the end, to your point, to make it even more annoyingly complex, if BMW builds a car in the United States, China will not buy it. So a German company that wants to put a factory in the US will not be able to sell its cars to China. It's so unnecessarily complex with carve outs and everyone that suffers. And who suffers in the end? The people of the country suffer in the end because the wall is built around us. And we can't benefit from the lower production cost or, for whatever reason, we have to pay tariffs. So you end up buying New York State Chardonnay at $20 a bottle because, French Chardonnay costs 21, and that's what ends up happening. The people suffer, and the businesses suffer. It's not free trade. It's not free trade.
No, I mean, well, that's for sure. But I'm just not understanding it because you're only hurting your own. You're only hurting your own products.
Right. Well,
You
when you're
know.
an exporter of raw materials, as we've become, as opposed to manufactured goods, I guess it doesn't matter as much. We sell more oil than we do cars now, it seems.
I guess. I mean, I just see it as impactful to the U.S. consumer at every level because whatever you're going to buy, again, is going to
Exactly.
cost you more. So
Exactly.
you're hurting
Corporations get carve outs.
you're hurting
People
you're
don't.
hurting any business that's doing business overseas,
That's
or
right.
producing overseas. Okay, and then you're hurting every consumer because the pair of shoes that you're making in China, taxed at 25%, is going up 25% or
Right.
20%. So you're going to have huge inflation off that. And
That's it. That's the home run. It's deflationary overseas and it's inflationary domestically. That's what happened in the 70s. Tariffs and embargoes drove the price up of imports. And so, the United States could make, the car companies made inferior products, jacked the prices up just below the tariff level and got away with it. And consumers suffer as well as American businesses that sell overseas. I don't know how it makes anyone great.
no, it doesn't. It's protectionism at its greatest level. But we're talking too much politics, I think, or too too much rhetoric, and you
How about
know,
this? How about this? If we believe in what we say, the trade is to buy Brent and sell WTI. If that's how I look at it, because uh, that spread could widen even more
yeah.
based on demand is in the
I don't,
east.
I don't, I don't really trade that or look at that, but I know Tracy trades that, and Bryn always looks at that. So there are pretty much experts on that, and I will actually ask them in the chat room, about opinions about Brent versus WTI because that spread is blown out, obviously.
Yeah, well, Brent is now Brent is the benchmark now, and WTI trades off of Brent, and it's a matter of demand moving east and Brent being closer to the east. And even though that we're producing more and we can export more, it really is a matter of getting it there. And I think in a nutshell, you'll probably get better information from Bryn and Tracy, but the spread is factoring in Iranian sanctions in the short term. And if those sanctions were to decrease, you would see that spread tighten. In the long term, I think the spread in a macroeconomic way is a reflection of a demand moving eastward. It's not really a tariff thing, but I'm just looking at it that way.
Yeah, I don't really trade the spread. I don't know it, but it's funny. I remember it being out at like $14 when crude was over $100. Brent was like $150 or $140. We were
Yeah,
like 126 or whatever. And then
yeah,
that trade actually inverted a couple of years ago when crude was down in the 30 area. So now, I guess as prices go higher, they buy that one, or there's more demand for that. Again, I'm not that versed in it. I know the spread's out at over $9. I'm not exactly sure this second where it's trading, but it's definitely bid, and I've seen it as high as $15 ish, and I've seen it as low, obviously, as inverted multiple dollars. So
yeah.
it is
Well,
a great trading spread. There is money to be made on it. It's something definitely to look at. I would really love to look at it more closely to, try to position it.
I used to trade the options on it as a market maker, and it's exactly what you said. It's WTI is an anchor, and Brent is the more volatile sister. I mean,
Did you
years and years
trade
ago,
Brent
when
options or WTI options?
Brent WTI options, they were spread options.
Oh, really?
They were spread options. Yeah, yeah. It was a product created to by the CME to bridge WTI traders over. It's a Brent WTI is a massive market for European companies, especially like it was a BP and a couple other companies dominated that market for years, and I think there may have been allegations of manipulation back in the day. I'm not sure, but it's certainly something that's relevant and always has been relevant as a comment on what the dominant benchmark is, as well as geopolitical tensions. Brent will be more affected by war than we would be, so to speak.
Yeah, I don't really trade that spread, so it's foreign to me. I'd like to, if they had options on it, I'd love to look at that and see, how that stuff prices, see if there's some inefficiencies there. But again, I don't really trade that. Mostly trade spec oil, and oil options on
And that's
WTI.
fine enough. Trading Brent TI options is a roach motel. They're not really liquid, and you can't get out once you're in. Can I ask you a question about oil
Sure.
today? Do you, are you look? I know you're flexible tactically, but what's the trade in oil today if you had your druthers or if you had your wishes?
Um, I would like to short oil. I know we're starting to move into November. November bread is about, I think, about 23 cents um, under for November. So I don't know if November is going to get up to 70, but I would like to sell ARC against 70. What's interesting is over the last couple of months in oil, when the expiring contract is going off the board as it gets, I think there's maybe 5 or 6 days in it. As it gets closer to the expiration, it's been bid, which is
Yeah,
interesting. I don't know why. Even if the market traded lower, it's been bid into the expiry of the
yeah.
futures
Fish
contract.
Fish talked about that, I think, in one of his interviews, and I experienced that when I traded CSOs. It seems like if you look at physical commodities, shorts have to get out first. I'm sorry, longs have to get out first. So if a fund is long front month, they'll either roll, take delivery, which doesn't happen, or get out. And then that's your first notice day. Then as you roll towards the actual expiration of the contract, you end up with, physical players that are short, with hedges that don't need them anymore. And so it's almost a mechanical trade that as the front month goes to cash, it decouples and we get like a 4 or 5 day rally. It was crazy to trade in CSOs because you'd have no hedge at all for what you were doing, and it is something I think that Mark echoed your observations in a prior interview that I think it's mechanically I think it's 99% mechanically tied to the longs get out first, and then the shorts with deeper pockets eventually make a decision to get out, and that is usually a day to 3 days before the actual future goes to spot. That's just something I've read and dealt with. So the
Yeah, I
question is, do
mean,
you want
I
to play
think it's probably different, during different periods of time. I was just spotting it as sort of a trend here. Um, and the trend was that, they were buyers and late, not early, late into this. So, it's interesting to sort of figure out, you know, what the positioning is, I guess, late into it. I mean, I would not suggest that anybody stay in these contracts, even really now. You're best off as a trader to roll to November because there's no real advantage. The liquidity dries up and it's not really a good trader. So, anybody trading oil, I would suggest not trading October. Just for someone like myself that trades a lot of options, you get residual positions basis October after the expiration. So you need to either roll to Novi, or you can hold for maybe a couple of days if you think, the market will move a certain direction. So, though, that's interesting to look at as well. But that's a trend that I've picked up on over the last couple of months. I don't understand it, but maybe there's just buyers that are actually people that need to take delivery late in those markets.
That's true too. You could see some refiners that are waiting for the last minute to buy crude for taking off crack spreads. Maybe that's part of the deal too.
Yeah. I just wanted to point out, since we've been on the air, the S&P has firmed up. It's trading on the high tick of the morning, pretty much up about 650. Nasdaq's up about 20, 21. Still looking. It's actually outperforming the S&P by just small basis points. But overall, I think we might see that trend. Stay, unless they take this that it's not going to impact technology as much as they originally thought, tariffs. So, it's something to look at. We like to trade that spread. We'll be in and out of that spread. But again, we don't really have a position, waiting. Want to be careful here. See if there's a response from China, which I don't know why they need to respond, but maybe they will. Maybe they don't do anything. Who knows?
Whatever the response is, it's to save face domestically. That's at least in part.
Yeah, I mean, listen, I don't understand the whole thing, but that's for another day.
One little small news update while you guys were talking. China actually filed a formal complaint with the WTO over that 200 million.
Oh, I thought weren't they doing that like last week?
Yeah, that's
or
a weak
whatever?
play. Whatever it is, it's an echo of something they've already been doing, right?
Yeah, I thought they came out.
Yeah, I
like
think
a
it's just the
week
first formal step of officially doing it once, Trump officially made the comments last night.
Yeah, well,
Okay, so
S&P's like it. They're making
sounds like
new
a weak
high.
play by them. We should just buy stocks.
Oh, without a doubt. They're not doing anything. What's the WTO gonna do? I don't know. But
They're going to ask the U.S. what they should do.
yeah, it's listen, it's a place we've never been, to be honest, which makes it really, really interesting. Obviously, I mean, I don't know when the last trade war was. I don't know if it was in Reagan era. But I mean, I do believe this is a full out, this will become a full out war at some point. What do they say? Don't underestimate China. Um, they have a lot of power, a lot more power than people think. So it'll be interesting to see how it all plays out.
Well, it's interesting. If you take a look at the S&P and you take a look at the U.S. equity markets, you aren't seeing anything. But if you take a look, I'm actually have the 1-year performance of commodity markets, and there's been a lot of carnage there. Gold is down 8%, silver down 17%, but then you get into some other metals like zinc is down 28%, lead down 18%, copper down 17%. Then you get into some other commodities, soybeans down 16%. There's definitely some carnage out there. And then you look at other global equity markets. Once again, it's just not happening in the U.S., but there's definitely some interesting moves out there this year.
Yeah, for sure. I mean, the commodities have gotten smoked, except for crude. But crude is like an extension, I guess, of the S&P.
Crude's up 15%, Brent up 18%.
Yeah. I mean, that's the outlier, and I think that trades, maybe those other commodities are reacting to tariffs, and oil is reacting to sort of risk on or some type of growth. I'm not really sure. But the S&P, as we speak, keep rolling on, new high as we speak, trading at 2903 on the contract. So interesting action. Any other thoughts, Vince?
No, but as an echo of what Mike said, the carnage in commodities, specifically base metals, makes sense when you look at the fact that the threat of tariffs and actually implementation of them, along with emerging market crises, has lowered the bid for physical commodities, and so if we're buying less stuff from them, then they have to buy less raw materials to make it. And what continually flies in the face of all this is, as you said, oil. Oil is its own. Oil is its own currency. Oil is its own stock. Oil is not just an industrial commodity. Oil is a medium of exchange, and as a result, it defies problems in emerging markets, even though they make their money selling oil.
Yeah, well, oil's on the high pretty much, and S&Ps are on the high, so they're moving together. Interesting, just to point out, and it's been just an underperformance for so long, but the DAX, although was lower earlier, is up, but it's not up much, and it's up 15 points, and you would expect it, which the market has completely underperformed, to be a lot better than that. So we're expecting, hopefully good trading today. The only negative to it is that volatility is down about 6% now, and I guess
right. How sick is that, Larry? Mike, how sick is that?
It's sick. I mean,
it's over. It's over. Sell your puts and sell some calls. It's over. No problem.
Well, but I guess the mantra on that is that you had the news. The news is in the market. The market's handled it well. We haven't opened yet, so we don't know how it's going to end up handling it, but it's handled it well. And on to the next. And the truth is, what's coming next? I mean, there's nothing really out there that can throw a wrench into this, and the only problem is that markets don't care. So that's the mantra. S&Ps are up 7.25. There's no stopping them for now, and we'll look at some options maybe for Wednesday. Maybe we'll short some SPUs if they get a little bit higher. Like to short oil, waiting a little bit. Wait for 13 minutes for the 9 o'clock opening, and then put a short on. Usually the algos have to, bump up the price, so maybe we'll get a better price. Overall in stocks, I like Micron Technologies, not as a trade. It doesn't trade, it doesn't move that much in a day to make a ton of money, but I do like it long term. I like the FXI against the U.S. markets. I'd like to point out China now is down about 18 for the year, but was down 20, and we were up 9. I like the mean reversion there. We always look at Tesla. It's sort of in no man's land. It actually trades well. It reacted positively to some bad news yesterday, and bank stocks are up small today, and the FAANG, other than Facebook, is all positive, anywhere from 50 basis points to 1.5%. So that's the takeaway here. Currency markets seem pretty tame. The Canadian is under 130, so that's an interesting one to look at, and that breeds, I guess, risk on, with that. And the British pound is at 131. I think it's been there for like 3 years. Goes to 129, 132. So
Right.
there's not a lot of trade there. The euros looks like it's breaking out a little bit. It's at 117. The figure looks pretty strong, but today, is kind of, I wouldn't say it's like, it's depressing that they shake off all news and they just buy. So we're in that mantra. You got to trade it that way. They want to buy. It's expiration. They usually go up. So I don't know if they're going to go up from this level, a lower level, or a higher level, but you should see the cash print up, and we'll keep an eye on that. And just wanted to go over the schedule quickly. Today at 10 o'clock, we have Phil Flynn from the Price Futures Group and a contributor to Fox Business News. He's on all the time. I've been following Phil for almost 30 years. Jim Colburn will be on at 11 o'clock from Commodity Research Group, talking global macro. And then at 1 o'clock, my buddy, Tommy Mack, who is really well-versed in options and option theory and option pricing and equities. So it would be interesting to hear from Mac today what his thoughts are, basis, the tariffs that have gone on and the reaction, and see if he comes up with any option plays on indexes, because that's where I frequent, so I like to see that. But as well, some equities. I saw him active yesterday in the chat room, putting on a bunch of positions, so it'll be interesting to hear what he has to say. And as we leave, S&P made a new high but came in a bit. NASDAQ is up about 22. Bonds actually took a leg lower here. I hadn't been looking at them this morning. They were actually
Less than a minute ago, Trump just tweeted something. I'm going to throw it out there and throw it into your calculus.
more
Donald
tariffs.
Trump.
More
a minute
tariffs
ago-
already? Did he
No,
know?
it's
Did he know he
it-
did
it's-
them?
It's out. I don't know where it's coming from, but he's connecting things that to me don't seem entirely correlated. Here we go. China has openly stated that they are actively trying to impact and change our election by attacking our farmers, ranchers, and industrial workers because of their loyalty to me. What China does not understand is that these people are great patriots and fully understand that. ... There's another tweet coming. I haven't found that. Oh, that. Well, anyway.
He's
So
serious.
no,
This guy
listen.
has lost his
Hold
mind.
on. Let me see if this is him
We're
or if
all
this
waiting. I
Wait,
posted
it could
in
be
the
a
chat. We're
spoof
waiting for the
account.
dot,
It could
dot,
be.
dot. No, it's legit.
Hold on. Is that the real one? It's not a
We're
spoof
waiting
account.
for him to type as we speak.
Holy!
Finish your
I-
thought, Mr. Trump.
Look, the farmers are complaining, and the farmers. The fact is, farmers are actually starting to chafe against the whole trade thing, and he has somehow, in his mind, connected
blaming
the
China.
farmers' problems with China's willingness to fight back, and that's
the
not.
guy is actually
It's not his
awesome.
fault, Larry. There's your answer. The trade problems are not bad for America. The trade problems are bad for China.
I don't know. listen, I guess we'll stand by. We don't want to stay on too long because maybe Trump fell asleep while he was
Waiting
in the
for the
middle
dot
of
dot
tweeting.
dot to finish.
So you see that too, Mike, right?
Yeah,
It's
I
not like
posted it. It's
it's
legit.
not a
He,
fake account I'm looking at.
No, of
Oh
course not.
my God. Honestly. And the market just chugs along and doesn't care. So, today I think we're going to see a downside trade off the opening. Yesterday, I think I gave some good commentary that the market traded a little bit heavy, suggested no positions into the close. And, I would think that, we will trade down from here. It may take a bit of time, but I mean, I don't know how this is bullish overall, but, we'll have to, wait later, to trade market reaction. And we're not going to be too opinionated. We're going to just trade the flow. At 9 o'clock, we're going to sell some crude either way. So we will enter a short position in crude oil at that point from that level. And, we'll use a stop about 50, 60 cents above the market and see how that trade plays out. And other than that, I don't see much. We're going to look at options and put some option spreads on. And that's the thought. Oh, you know what we left out? We left out gold, your buddy that doesn't move.
Nothing to leave out there. Had a nice trading gold yesterday. Didn't max it out. Missed my target by 3 ticks. Took a small profit, and now we're range bound again. We could have an outside range today. Sell it below 1207, buy it above 1195, and be careful fading either direction.
Well,
But,
I will say that the opportunistic trader low, which we called the low, is still in for now. We're about $30 off the low, so we'll see if we can hold again in this level at 1200. And
that's right.
I haven't traded it in a bit. Funny, oil's rallying up. I'm telling you, at 9 o'clock, the algo's going to kick in and just go berserk, and that's what they always do. On the hour, every hour, but we'll put a short on at that point, and that's it. Other than that, I think it was the overnight was weak and then strong. I see the NASDAQ stocks and they're up, but they're begrudgingly up, so it'd be interesting to see how this plays out.
Right. Trade because you want to, not because you have to, and you'll make money in this market anyway.
Absolutely. So we'll be back to you either pre-opening if there are any changes or after the opening to update everybody. I hope everybody has a great trading day today. I think there's going to be a lot of opportunities. Keep the powder dry and, just wait it out. I forgot to mention yesterday we did trade Apple, and we took $1 out of Apple. We'll look at Apple again. It doesn't look like a big mover, but I think the market in Apple will trade heavy. So we'll look at that. And that's it from the perch here. And again, any other closing comments that you may have?
I think a purple phone case might make Apple rally a couple
I
dollars.
will mention that President Trump has finished his ... He is firing back, saying China has been taking advantage of the United States on trade for many years. They also know that I am the one that knows how to stop it. There will be great and fast economic retaliation against China if our farmers, ranchers, and or industrial workers are targeted! Exclamation point.
Who is writing this shit? Kim Jong-un?
No, it's it's him, and he's
But you know what's interesting? The
I'm
market
saying the
has
phrasing
no
is getting
reaction.
very dictatorial.
The market has no reaction to this clown.
I actually think it's starting to be we're about 60 days away from the midterms, and this is Trump starting to kind of position himself for they're the victims, they're being everybody's against them sort of thing.
Wait,
China's against
stop
them.
right there. Stop right there, Mike. That is spot on. That's an angle I didn't think of at all. I think that's spot on.
That's what he was playing up as well before the his main election was the world's out against him, and they're going to lose the election because everybody's against them, that sort of thing. And that's we'll see.
That's right. If he can bluff his way through the election and not lose too many seats in the House or Senate, then that's mission accomplished. Oh, this is politics. Shoot me. Shoot me now.
Well, everything that's been going on is politics.
I should be trading. We should be trading House and Senate seats instead of stocks and oil.
Yeah.
Uh,
We'll see how
guys, I
everything
have to
plays
go.
out.
Have a
All
great
right.
day.
All
I'll see you in the
right.
room.
Enjoy. Yes, for sure.
I have to get stopped out on something, I'm sure.
Ay, ay, ay. Have a great day.